Hey YouTube, so welcome to this current module, which is Market Structure Basics. So in this current video, we'll be looking at basically the different type of markets. So there are namely two basically, which is trending markets, which is where market is either on the uptrend or a downtrend, or the other is ranging markets where there's no clear distinct trend and market is just ranging, price levels are basically just ranging at a certain area over a long period of time, over a certain period of time. So we can see that markets in general, right, they tend to move in zigzag formation where they form series of highs and lows, right? There's no way that markets can just move up, straight up like this on the uptrend and straight down like this on the downtrend because it will be too overextended already. Right? Markets, at some point of time when they move up, they need to breathe again. They need to contract to form a new higher low. So they expand to form a new high, contract again to form a higher low, and so on and so forth. So whereas for downtrend, it is the same but just the opposite direction where they expand to form a low, contract to form a lower high, expand to form a new low, contract to form a lower high, and so forth. So basically for uptrend, there's a series of higher high and higher lows. For downtrend, there's a series of lower highs and lower lows. So in the real world application, you can see that markets are way more fractal because it's not as clear-cut as this thing in the textbook example, right? But the whole idea is still the same where, of course, there's still a series of higher high, higher low, higher high, higher low, market expand, market contract, market expand, contract, expand, and so on and so forth, right? Whereas for downtrend, it is the other way around where like a high, market expand, contract a bit, expand again to form new low, contract, expand, contract, expand, expand all the way again, right? So armed with this information, right, like what is the optimal way? How does this apply to us in our day-to-day trading? So ideally, this is optimally trading markets are the ones that's the most ideal to trade, where we should by right trade for when it comes to uptrend, we should be buying off higher lows when the contraction period has ended, right? We should buy from higher lows because ultimately, if let's say on the trading market, right, if we don't wait for any pullbacks or whatsoever, right, our risk reward is not exactly maximized, right? Because let's say if instead of taking from here, we take a trade from say here, a buy, the only reward that we can capitalize on is basically this much only, right? Before it hits our stop loss and all that, right? So likewise for downtrend, it's the same. It's just that we now instead of buying from a low, we buy from a lower high, right? We buy from here. Sorry, we sell from a lower high. We sell from here, we sell from here, and we sell from here. We won't necessarily sell after much position move because our reward is technically only from here to here. The reward isn't as much as compared to if you buy on a retracement, on a pullback, basically. Okay, so in a real world example, this is what we can see, right? Where, of course, on all our higher lows, we take an entry from here, we take an entry from here, we take an entry from here, right? Like we won't necessarily take an entry like, let's say over here, we won't necessarily take an entry from here in the middle of a move. We'll wait for pullback to happen first. Likewise, it's the same thing here as well, right? Like we won't necessarily take a trade from here. We'll wait for pullback to happen, wait for pullback to happen, and so on. Some of the common mistakes that is being made by beginners is that, of course, like instead of trading from a lower high, from here, 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 as seen in the previous examples just now, right? What traders tend to do is that, even for myself, when I was a beginner as well, when I just started, like we tend to try to anticipate where the double top is. Maybe there's one here, there's one here, there's one here. Or it's essentially the same point, right? Like they try to take from a resistance level. So this is technically a resistance level here. This is technically a resistance level here, and so on. So taking all these trades is usually very dangerous, right? Because it can cause you to lose unnecessary profits when technically you're technically selling on the uptrend, which is so dangerous, right? So this RSI and Bollinger Band, which is at overbought level, right? Technically, if price were to reach here and here, or even here, right, your Bollinger Band might reach a overbought level, right? Which is still very suicidal, right? Because it's still technically on the uptrend, and this is not, you should never ever sell on the uptrend, right? So in the other real example, we can see now from a downtrend, ideally we should trade from the lower high where, of course, it expands, contract, lower high, expand again, contract, expand, and so on, right? Expands to form here, we take a sell from here, we maximize our risk reward. But then again, the common mistakes that most noobs will make in comparison to taking from a lower high, right? What they can do is that what they may do is that they may anticipate the double bottom, which is one here, there's one here, there's one here, and there's one here, right? These levels. So this is technically a far away support here as well, here and here, right? So again, with regards to the downtrend, you don't buy from a downtrend, right? You usually have to wait or you sell from a lower high. This is the best and the optimal way to trade because trading like this is very suicidal as a whole. It can easily lead to a lot of emotions, a lot of events trading and so on. But even though price is very low, like here, right? It's very tempting to take a buy from here, from the very low to get all these profits, but not knowing that price can always still go lower no matter what. Okay, so next we will move on to the next type of market, which is the ranging market. So basically, we can see in these examples that because in the ranging markets, price is just bouncing back and forth within a specific zone or range. There's no clear like uptrend or downtrend as a whole, right? Like there's no higher highs or higher lows that's being formed, that's consistently getting formed, right? So basically, the highs and lows are just closing off at very random spots. There's no clear examples to show. So this is some real world examples, right, where we can see that right the lows and the highs are very like uncertain. There's no clear like higher highs and higher lows being formed. This could potentially be like forming a downtrend already, right? Because a lower high, lower low, lower high, lower low, but price in the end came back up here again, right? So technically this came up, but it came back down again, right? So it's very difficult to tell, like over this period of time, price was just ranging as a whole. Price was just stuck within this range. So you might ask, right, like would the best approach have been to trade from highs and lows? It is really questionable because it's not that straightforward after all, right, to trade ranging markets where it's very difficult to tell whether or not the highs and lows will hold. So we see from this example, right, like let's say, right, this is the high we're taking from. This might potentially have held, but then if we trade from this low, right, we trade from this low, it might not have hold. Like we trade from this low, it might not have hold. If we trade from this high, it might not have held. If we trade from this high, it would have held. So it's very like subjective. It's very 50-50 to tell like where exactly price can go, like which highs or which low will hold. So this could be borderline gambling already, which is not what we want to achieve, right? Secondly, it could also ranging markets could also be the result of news events. So just for some context, right, like news events, major news events like consumer price index, non-farm payroll, NFP, and interest rate decisions as a whole, like prior to all this news, right, like market might be readying itself, preparing itself to make to track traders as a whole before it goes to where it needs to go. So it's very difficult in general to determine to tell when if you're not experienced enough in the market to tell which side the market is tending towards to. Because you might fall into the trap as a result, right? Then the next case scenario is that ranging markets usually can also occurs either in Asian session or in end of US or in when US during the late US session when London session has already closed. So this usually means that in these sessions, right, there's very little volume. So this means that there's slow movement. And when there's slow movement, price will just range at your entry levels. And price there's no profits that traders can make when price doesn't move. And this could lead to different psychological effects like revenge trading, overtraining, just staring at the chart, hoping for things to happen and so on. Right. So that's why as a whole for beginners, it's usually best to avoid trading when markets are generally ranging, right? Due to all these reasons. Okay, so just to recap, right, for today's video, on the trending market, we learn uptrend and downtrend. So on the uptrend, we are buying on the higher low. On the downtrend, we are selling on a lower high. And as for ranging markets, we are not able to trade. So with that, of course, we have come to the end of this video. And of course, in this current module, which is market structure basics, right, we'll be further going through like other concepts because I just briefly touched the surface with regards to highs and lows only. Like there'll be a few other concepts that will be good for traders to know to determine like the optimal entries and all that. The terminologies to determine better entries and all that. So with that being said, please do like and share and subscribe. And we hope to see you again soon.